normally you get a violent move upwards in January, February, March, and especially when gold finally breaks this 2080, 2100 level. I think you can expect a very, very strong rally. And this rally will take longer than the previous ones. We had a very short recovery rally in 2016, a very short one in 2020. I expect this bull market to really start and take much longer.
The price of gold is surging again after the retracement from an all-time high. The market structure is once again bullish, and the price is making higher highs after dropping to $1,978 for correction. The price also closed above the $2,045 resistance level. Willem Middelkoop, founder of Commodity Discovery Fund, predicts a strong, enduring rally if gold exceeds the crucial levels of 2,100. He anticipates this bull market to be more sustained than the brief rallies in 2016 and 2020. Western investors' interest in gold led to an increase in its rate from a minimum of $1,160 in the summer of 2018 to a record high of almost $2,073 in May 2023. During this time, the precious metal has become one of the most attractive financial assets on the planet. Willem attributes the strength of precious metals to perceived credit risks and a shift in central bank policies, notably by the Fed. Moreover, he states that the weak dollar affects precious metals and mentions Russia and China exploring alternative trading systems with new currencies tied to gold. Reducing the dollar's global role is inflationary, diminishing its value tied to the U.S. government's credit. Even if the dollar index stays stable or rises, this shift can lead to higher commodity prices due to reduced purchasing power globally. Regarding silver market opportunities, Willem urges buying during dips while foreseeing a rapid uptrend. Silver prices rose in European trade on track for the fourth straight session, hitting a 2-week high and on track for the second weekly profit in a row as the dollar lost ground. Willem views equities as dirt cheap after a 13-month correction since the summer of 2020. He notes breakouts in GDX and SSJ in individual stocks, highlighting Newmont Mining in the precious metals sector. Now we present the clips of Willem Middelkoop's insights from his recent interview with Wall Street Silver. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
Could be a special year. A lot's happening. There's some risk on general, the broader equity markets. Of course, we've seen a double top for the Nasdaq developing. We've seen new all-time highs for the Dow Jones. If you look at valuations, you can envision a correction which takes us down 20-30% maybe. There's a lot of credit risk in the market. I think that explains why gold is strong, why precious metals are strong, and especially now the Fed and other central banks seem to start their pivot. An exciting year ahead. We've seen part of that run already. Gold is trading $200 higher than a few weeks or a few months ago. But if you look at the equities, I'm a fund manager. We have an equity fund and commodity fund. So if I look at the valuations, it's dirt cheap.
Right.
We had a correction which took almost 30 months. We had a previous high in the summer of 2020. And now we see many breakout patterns. We see it in the ETFs, the GDX, the SIL, SILJ. So many breakout patterns also in the individual stocks. We see it with Newmont Mining, which is like the largest precious metals listed company. So I expect a run for these stocks. It already started. We are at the end of tax loss selling season, which means that all the smaller companies which had seen all these losses are still sold down for people who want to use the losses in their for tax reasons.
Right.
And normally you get a violent move upwards in January, February, March, and especially when gold finally breaks this 2080, 2100 level. I think you can expect a very, very strong rally. And this rally will take longer than the previous ones. We had a very short recovery rally in 2016, a very short one in 2020. I expect this bull market to really start and take much longer. Well, the jury is still out. And if you look at the dollar has really been softening even today. I think that's the driver because the driver of the strong precious metal prices.
Right.
But if we focus on the geopolitical side, one thing is certain: the BRICS countries, Russia, China, they do understand that the US is a paper dollar system. And they do understand that they are a more commodity-based system. They're working on a parallel trading system. They're working on their own, I think, their own currency. And whether that will be gold-linked, gold-backed, commodity-based, I don't know. But I always listen to what Zoltan Pozsar says. He used to be with Credit Suisse. He understands these dynamics very well. And he has been, he's on the record by saying we're witnessing the birth of Bretton Woods 3.0, a new monetary system coming from the East, centered around commodity-based currencies. And I think that's spot on. If you study supply and demand, there's a huge physical offtake coming from the East. We see that the huge import numbers from India, from Turkey. But we all know the paper games are still being played, selling down the silver price with selling futures on the US markets.
Right.
But there's some interesting developments. I think the price discovery mechanism will slowly move from west to east. And this means that we might get a bifurcation for the price. So we'll see maybe higher prices coming from Shanghai, from the east, especially because the physical demand is so large. So I always advise people, just buy the dips in silver, buy the physical metal, because one day this market will start to run, and it will run fast.
Willem Middelkoop anticipates a shift to hybrid wars with a financial focus involving commodities like gold and silver. The price of silver is widely forecast to rise again in 2024. But a global economic slowdown could cap its gains even as industrial demand remains close to record highs, pushing up the gold-silver ratio of the two formerly monetary metals' relative prices. Despite some European voices advocating for physical money, he foresees the rise of CBDCs, expressing concern about potential risks to personal freedom. The introduction of national digital currencies could have major implications for the business model of central banks and the risks they face, a Bank for International Settlements group said. Meanwhile, Willem notes a decline in U.S. global influence, citing 140 countries favoring China as their top trading BRICS partner. Let's get back to the interview.
Going to war is the traditional game plan for the U.S. But we shouldn't forget, you have 140 countries out there who don't support the Western sanctions on Russia. So does the US, does the West want to fight everybody in the world? I don't think that's possible. Of course, we will have proxy wars like we have in Ukraine now, like we have in Gaza now.
Right.
The world is getting very divided. It's like a new Cold War. But I can't envision a third world war, everybody fighting, but we will see a more hybrid war developing, where there's more of a financial economic war, where gold and silver and other commodities will come into play. We've seen export bans coming from China for the rare earth. And I think this will move prices up. This will increase inflation. I think inflation is not over yet. We'll see another wave of inflation. Lots to watch here. Dear leaders, they love to have more control over their people, so they love digital currencies. It's impossible to stop the introduction of digital currencies. Too much to be gained by our governments to introduce them.
Right.
And also China has uses the same methods. You can only hope, and here in Europe there's quite strong movement who says there should always be physical money available as well. Even the German Bundesbank has been a proponent of that strategy. But I think you can't stop the central bank digital currency. But there's a huge risk because we might lose quite a bit of freedom there. The US is developing into some kind of real life joke, how can
seriously.
Experience? How can this country be the leader of the world? Explains why so many countries, the 140 countries I mentioned, are not following the West, are not following the US anymore. US isn't their largest trading partner anymore for most of these countries. China is their largest trading partner now. So they listen to the ambassador of China more than to the ambassador of the US. And I think that explains this dynamic. And this goes for all countries in Middle America, all countries in Latin America, all countries in Africa, all countries in the Middle East. So it's a numbers game. The West is 1.5 billion people. The rest of the world is 6 billion people. And the 6 billion people are leaning more towards the BRICS club now than the US club. Within the mandate of our fund, we can only invest in listed equities. So we can't buy the physical. I buy the physical myself. But the fund is heavily invested in listed equities. Precious metals related, that's 50%. Battery metals related, that's 40%. And then another 10% in uranium and a few other specialties. So that's our position. And as said, we've had a long correction. Actually, we started the fund in 2008. That was the top of the last cycle. We grew the fund to over 100 million euros in the last 15 years. Wow. And that was against the stream. But now I really think we're at the start of a generational bull market. Look at supply demand. So many shortages developing. Look at the electrification. Look at the green revolution. There's so much demand for all kind of metals coming. And then you have the East against the West against the BRICS. And I think the BRICS countries will play the commodity card.
The dual impact of financial system distress and geopolitical instability underscored gold's role as a stable investment during tumultuous times. Reporter Yusuf Khan notes that ANZ recently said, "Gold is likely to maintain its current rally in 2024, with a softening economy, falling interest rates, and strong central bank demand likely to provide support." What are your thoughts on the evolving role of gold and silver in the context of geopolitical dynamics and the rise of digital currencies? Share your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.